Thai economy has until October to rebound or bad debts will begin to weigh heavily on the bank's grim prediction and outlook for Thailand's economy. Battered even before the COVID-19 emergency by changing world trends and trade tensions. But now, to quote one of the country's leading economists this week, being kept alive with the help of ventilators. The same economist has warned that if Thailand's closed businesses and economic sectors during this crisis fail to rebound in strength by October, that the level of bad debt on the balance sheets of the country's banks will become a serious issue. A leading Thai bank economist has predicted that October will be a key month of reckoning for Thailand in what he described as a bigger setback to the kingdom's economy than the 1997 Asian financial crisis. Charles Kenkan, the executive chairman of Kasikorn Bank's Financial Analysis Unit, predicts that if businesses do not reopen fully by then and the economy fails to rebound, then non-performing bank debt will begin to weigh heavily on Thailand's financial institutions. The Economist says what is saving Thailand right now is the financial strength of the Thai banks in recent times. Another expert, the chief economist of Bangkok Bank, Buranajwawatana, has said that this is Thailand's worst economic crisis possibly in the last 120 years. Bangkok Bank is seen as one of the country's strongest banks and recently expanded in Asia with its acquisition of Indonesia's PT Bank Permata for $2.7 billion or $84 billion. Yet, at home in Thailand, the leading retail bank's economic thinker sees the current crisis as a historic challenge. It comes as the kingdom has been left reeling from the continuing impact of the COVID-19 emergency, which has hit the two drivers of the export-led economy head-on. Foreign tourism, which makes up 15% of Thailand's GDP and up to 20% when taking into account ancillary economic activity, is at a standstill since late March. The country's exports have shriveled with darker global economic prospects in an environment which has severely dented the international car industry. The industry is key to Thailand's industrial base and a driver of exports. Thailand's exports fell also in 2019, well before COVID, but trade exports excluding gold contracted on a massive scale by 34.8% to the end of May 2020. Thailand's exports had begun to contract in 2019, falling 2.65% for the year, driven by the US-China trade war and a stubbornly high Thai baht. In the first 3 months of 2020, even before the catastrophic shutdown, exports from Thailand declined by just over 5% in baht terms. Figures for March and April, coinciding with a sharp drop in the value of the baht as the shutdown kicked in, saw Thai exports surprisingly go up, but it soon became apparent that this was driven by the export of gold. Figures released this week by Thailand's Commerce Ministry show, in fact, that when gold is excluded, Thailand's exports to the world from January until May inclusive fell by a staggering 34.8%. Thailand exported $225 billion in gold in 5 months, which distorted the picture in April and May. The kingdom exported $225 billion in gold during the first 5 months of 2020 as worldwide investors sought the precious commodity in these uncertain times. The surge in gold exports coincided with the sell-off by many poorer Thais of gold jewelry, which many Thais use as a form of savings, cash flow or financial bulwark against hard times, which can be easily brokered for cash at a gold shop. Since then, the Thai baht has risen again, climbing 6% against the US dollar in the last 3 months. The Bank of Thailand has warned that the appreciation of Thailand's currency is a real threat to any prospect of the kingdom's recovery from the COVID-19 calamity. It has also confirmed that the trend defies the country's economic fundamentals, and there are concerns, referenced by the bank itself, that Thailand's economy has become the subject of international speculation. U-shaped recovery or even an L-shaped one by 2023 emerging as economists see a darker outlook. The Bangkok Bank economist, Buranajwawatana, summed up the situation this week when he said, "A stronger baht is also making exports worse, while other economies are also weakening, and the Thai tourism and auto industries are contracting sharply." Leading economists in Thailand are now, increasingly, predicting either a U-shaped economic recovery or indeed an L-shaped one, as many believe the Thai economy may not return to pre-COVID levels of employment until 2023, if at all. Bigger economic challenge than the 1997 Asian financial crisis, banks have been a buffer this time. Many economists are in broad agreement that the scale of the challenge facing Thailand is larger than the 1997 financial crisis. The buffer for Thailand in recent months has been the banks. This is due to the exemplary work undertaken on this front by the Bank of Thailand under its outgoing Governor Virathai Prabhop in preparing Thailand's commercial banks and those under its remit for just such a shock. However, the scale of the downturn and the slow-moving, extended nature of it will now test these defenses. The bank, in recent weeks, ordered all financial institutions to suspend dividend payments and is preparing to conduct new stress tests on the retail and commercial banks as the impact of the COVID-19 economic shutdown feeds itself into the wider economy and financial system. 90,000 Thai firms in difficulty with a 1.7 trillion cash injection required to keep firms open. There are reports of financial difficulties and a shortage of cash in many Thai firms right now, including large corporate businesses. One estimate by Krungsri Bank suggests that 1.7 trillion is needed as a cash injection into the system, while up to 90,000 Thai firms are said to be facing a financial challenge. The economic research team at Krungsri Bank is predicting that Thailand's economy will contract by 10.3% this year, which compares to an 8.1% already predicted by the central bank in Bangkok. Krungsri only predicts a 2.9% recovery in 2021 and a modest 4.4% in 2022. Long road to recovery. The bank suggests that the economy will only grow 2.9% in 2021 and a further 4.4% in 2022, meaning this economic downturn will not be short-lived. An L-shaped recession. The bank has warned that an inept government response to the crisis could make matters even worse. If government policies fail to address economic woes, the recovery will be L-shaped, and it may take more than 3 years for the economy to recover. Somprawan Manprasert, the bank's chief economist, has cautioned. The economist has been critical of Thailand's economic policies given the country's strong international reserves. Thailand's chronic aging problem is hitting the economy hard right now as older workers opt out. The Bangkok bank economist, Mr. Buren, also points out that the kingdom's ingrained problems before the COVID-19 emergency are certainly not gone away and indeed are biting even harder than before. Chief among them is Thailand's chronic problem with an aging workforce. The crisis has seen many older workers retire from the fray and they will not return. This has coincided with the return home of cheaper migrant labor to neighboring economies where they are more likely in the future to find employment. Foreign tourism losses of 1.6 trillion. Mr. Buren also expressed alarm at the writing off of the foreign tourism industry and predicted only 9 million visitors for this year, of which 7 million had already arrived before April. This could see the sector contract by 80% with a loss of a further 1.6 trillion. The UN last week suggested a loss of 1.47 trillion, while some economists have calculated a figure close to 2 trillion. Government planning to borrow 1.9 trillion, bringing it to its legal limit even as GDP contracts. The government is in the middle of a plan to borrow 1.9 trillion, of which 1 trillion is earmarked for income supports for the less well-off and 400 billion to support business and the bond market. The borrowing plan will bring it close to the legal borrowing limit under Thai law. The Thai government's borrowing limit is 60% of the kingdom's gross domestic product. However, the problem is the economy is contracting so sharply that this may become a political issue as well as a financial one. Progress of Thailand's economy has been lackluster. Mr. Buren outlined a picture of Thailand falling between the stools with an economy where 30% of the population still works on the land, generating 8% of GDP. The country's industrial base has been battered not only by the COVID-19 crisis but by changes in world trade, supply chain systems and indeed technology. The switch to electric cars has befuddled car makers worldwide, and Thailand has been impacted by the efforts of international companies to come to grip with a declining and confused car market as well as the current unprecedented emergency. Furthermore, the kingdom's flagship projects, Thailand 4.0 and the Eastern Economic Corridor, have failed to deliver on their key goals despite initial optimism, hype and exuberance. Bank shares have lost 35% of their market value. Thailand's banks have seen their share price crater by 35% in the last year. Notwithstanding this, despite the damage caused by the COVID-19 emergency and the trade war contraction before it, economists still feel that larger banks are more protected due to the nature of their loan bases. These institutions are more linked with government projects and larger corporate funding. The concern is for smaller and medium-sized lenders. Focus will move to the level of bad debt on the balance sheets of Thai banks later in the year. Charles Kengkan is the executive chair on Capricorn's Bank's research unit. He readily accepts that this crisis is bigger than the Asian financial crisis, 23 years ago. The most important thing to focus on now is the asset quality, as bad debts were estimated to be 21% of 15 trillion of total bank loans in the first quarter, and it might spike to 29.9% in the second quarter, he explains. Non-performing debt estimated at 30% at the end of June from 21% at the end of the first quarter. He references the stronger balance sheets of banks this time around. However, he points to the fact that in the first quarter of 2020, a large proportion of bank debt was reported as non-performing or bad at 21%. He predicts that this will rise sharply to 29.9% or just shy of 30% when figures to the end of June are examined. Mr. Charles further predicts that if, in the third quarter of the year, there is not a significant recovery in the Thai economy, then these debts will begin to weigh heavily on Thailand's financial institutions. It will become a problem. The bank economist has pinpointed October as a month of reckoning. The question, as he sees it, is will the businesses that have been slow to reopen have come back by then? Everyone is like a patient, surviving with the help of ventilators, but what happens after that is still not clear. Nobody knows if businesses will be able to come back. Further reading. Thailand's closure biting harder as one airline gets ready to cease operations forever and lays off staff. Tourism industry could be left on its knees if curbs on inbound foreigners are not relaxed or lifted in time. Thai economy in even greater peril as COVID-19 shutdown appears to have had a bigger impact than expected. Election of Prawit as Palong Prakarat leader will see more grassroots politics in government. Economic hole caused by virus pandemic yawns as Bank of Thailand flags large current account loss. Emergency decree extended by Thai government but politics behind the scenes abuzz with PPP party heave. 92% of suicides due to the virus are among the self-employed according to expert research group in academia. Government moves to clarify that it is not seeking cash from the kingdom's richest business leaders in overture. Thai MP calls on Prime Minister to resign as index shows a collapse in business confidence to a 9-year low. Polls show the public becoming more polarized as Deputy PM assures public there is nothing to worry about. Fake News Center ready as rights activists push for the toning down of the Computer Crime Act. Thamanat claims the media attacks on him are a plot to overthrow the Thai government by a network. New Thai cabinet finalized as government set for July launch, PM to retain old hands at the helm. Baht again being targeted by big money piling even more misery on an already crippled Thai economy. Industry boss urges Thailand to join Alternative Pacific Trade Pact and plan for a long recovery from virus debacle. Prit to meet the people as former minister lashes out at the current government's multi-crisis economy. Thai workers left facing mass unemployment as Chiang Mai hotel staff protest 10 meters wage arrears. Risk must be taken to open up Thailand and its tourism industry without delay, says richest man. Richest man in Thailand calls for less time spent at school and a Thai education revolution for a new era. PM calls in business tycoons to help the country crawl back to economic normality after virus catastrophe. Government begins looking at borrowing options to fund huge 1.9 trillion economy rescue package. Thailand and US aim for a new more proactive trading relationship as ambassador meets Prayut. Challenge of defeating both the health and economic emergency, a big ask for Thailand's government in crisis mode. Thailand faces a third shock after the virus if high debt and the informal economy are not prioritized. No limit on borrowing as Somkid plots the biggest stimulus package yet to address the virus crisis.